Investing in an IPO, like the recent debut of social network Reddit on the knees, can be a wild ride, but it can be done differently and with less risk. How about exchange-traded funds, ETFs, that specialize in IPOs? So what can you look forward to in today's video? My selection of ETFs investing in IPOs, basic information about IPOs, what are the advantages of an IPO, why invest in IPOs through ETFs, my selection of ETFs investing in IPOs. I have found several ETFs that replicate IPO investing. These are ETFs investing in the US and international markets. I'll discuss the ETFs separately and then we'll discuss which ones make sense to invest in. I'll list first. First Trust US Equity Opportunities ETF with ticker FPX. This ETF tracks an index that includes the 100 largest IPOs in the US. It invests in stocks that it has held for about 4 years. The fund uses filters other than size and liquidity and is weighted by market capitalization with a 10% limit on individual stocks. FPX is available at a price of $100 per share. The average trading volume of this ETF is 24,500. The fund's net assets are $770 million. The expense ratio is 0.61%, which is the fund's annual investment management fee. FPX was launched back in 2006, which means it has a long history in the market and can provide investors with confidence and stability. Renaissance IPO ETF with ticker IPO provides access to the largest and most liquid newly publicly traded stocks of US companies. The ETF's current price is $41. Average trading volume is 65,000. The fund's net assets are $178 million. The fund's management expense ratio is 0.60%, which is a relatively low rate. The fund was launched in 2013, which means it has a history of 11 years. Renaissance International IPO ETF with ticker IPOS provides shares of newly publicly traded companies that are internationally traded. It is available at the price of $14. The average trading volume is 1,718, which is quite low and may indicate a buying or selling problem. The net assets of the fund are at $5.41 million, which indicates a small fund size compared to others. The fund's management expenses are 0.80%, which is a higher rate than other ETFs. IPOS was launched in 2014 and is one of the funds with a shorter history. Which ETFs to choose for investing in IPO? I've sorted the listed ETFs into a table where I can quickly analyze them by basic parameters. If I look at the average volume, I can immediately eliminate the IPOS ETF, which only has 1,718. The ideal average volume is 100,000, but I wouldn't pick any ETFs. In the next column, I'd knock out the IPO ETF, which only manages $178 million, meaning it's one of the smallest of those mentioned. For expense ratio, I would exclude the IPOS ETF with a 0.8% value. As for history, even though IPO and IPOS only have a 10-year history, that's enough to show the performance of the fund. In the end, the FPX ETF comes out best for me from the table. For one thing, it invests in IPOs of US companies, has reasonable average volume, has the highest net asset, low expense ratio and the longest history. But I have to admit that the average volume of 24,500 for ETF FPX is low, and this would be a problematic parameter for me personally. But I leave that up to you if you feel the same way. Basic information about IPOs. The process of taking a company public begins with preparation and negotiations with investment banks and legal advisors. This is followed by the regulatory approval phase, where the company files for approval with regulators such as the Securities and Exchange Commission (SEC). The actual public offering of shares IPO usually takes place through an auction or fixed price offering. After the IPO closes, the new shares begin trading on the stock exchange and the company becomes publicly traded. An IPO is a complex process requiring careful planning and collaboration with financial experts. What is the difference between investing in IPOs and investing in established companies? New companies are entering the public market for the first time and thus do not have a long history of operations or a track record of revenues and profit. In contrast, investing in established companies provides investors with a kind of certainty that is backed by the company's history. What are the advantages of an IPO? For investors, it is mainly the ability to access the growth potential of a company right from the start. IPOs often bring innovative products, technologies or services which have the potential for rapid growth. In this way, investors can take advantage of opportunities to invest in companies that are still in the early stages of development and have the potential to achieve significant growth in the future. Which factors should be considered when choosing an IPO? The company's business model, performance history, management team, potential market growth and competitive environment. It is also important to evaluate the value of the offered shares relative to the future growth potential and profitability of the company. What is the historical performance of the IPO and what is the probability of success? Well, exactly. The performance of IPOs is very diverse and the probability of success can vary depending on specific companies and market conditions. Some IPOs will achieve high growth and record excellent results, while others may be quite disappointing. Why invest in IPOs through ETFs? The main reason, in my opinion, is diversification. ETFs offer a wide diversification of investment across many different IPOs and sectors within one investment product. This significantly reduces risk. ETFs are traded on exchange just like individual stocks, allowing easy buying and selling of the asset. You have access to a portfolio of IPOs without having to search for individual stocks and repeatedly review the filings of companies that go public at the IPO stage. Finally, the fee for buying ETFs is lower than buying individual stocks. Yes, there is a fee-expense ratio for annual management of the ETF, but it tends to be minimal. And as for buying and selling ETFs, that is identical for both stocks and ETFs. As a long-term investor, how much capital should you allocate to venture capital? I generally recommend only putting a small portion of your portfolio, say 5 to 10% into venture capital. This will minimize the impact of a loss if the investment does not deliver the expected results. I might even say less than 5%. After all, the stock market offers a plethora of opportunities, so there is no need to take too much risk. And that's all for today. It's great that you made it to the end. If you're interested in anything here, give the video a like and click subscribe for more interesting topics around long-term investing. I look forward to hearing from you. Have fun and invest wisely.